Everybody, it's Shannon from AlphaTrends.net. Today's Friday, the 20th of July, 2018. Hope you had a good week of trading. The markets were kind of a mixed bag here. The Nasdaq lost a little bit of ground, which is surprising when the semiconductors were up 1.4%. The Russell 2000 gained a little bit more than 0.5%, and that is what I think looks like the best looking chart. Oil lost some more ground. So let's take a look at the charts and make some sense of it. The 280 level continues to be an area where this market is kind of fighting a little bit of a battle. You have to realize that it's rallied about 4.5% here in the last couple weeks, and some pullback or either a pause that corrects sideways through time, or some further pullback wouldn't come as a surprise at all. We're still in a healthy uptrend above a rising 20 and 50-day moving average, and I don't see anything here that says that this market is going to reverse on the daily time frame. When we look at a 30-minute time frame, let's take a look here. Okay, chart was just a little bit slow, but the S&P 500 actually, when we look at what it did this week, if you recall, where the buyers regained control a couple weeks ago was right here. So we've been measuring a volume-weighted average price from that level where the buyers regained control, and you can see that we had touched it there. And then this week, we were talking about the volume-weighted average price from that low, and that the gap lower found buyers there, and then we found buyers there the last 2 days as well. So the lows of the last couple days, if we pull back a little bit, I think the next important level that we want to keep an eye on next week is 278.50-ish. If we drop down to that, I don't view it as a big deal, and even a little bit below that. But the 5-day moving average is flattening out a little bit, so it tells us maybe we want to take our foot off the gas a little bit. You have to consider that we had a lot of earnings reports this week, and overall the market has held up. If you look at it in terms of earnings, the market has held up well. The Nasdaq gapped lower, of course, after Netflix earnings on Tuesday, and we did, kind of cross back and forth above and below that level for control this week. But that level that we had gapped down to on Tuesday was also the level where the buyers had regained control in the Nasdaq. So it's good to see that this volume-weighted average price continues to find buyers and is defended as an average level. So 178.30-ish, if we get down to there, I don't think it would be a big deal. We are looking like maybe we need in this market as well to consolidate a little bit with it below the declining 5-day moving average. So looking to the daily time frame, we're still in a major uptrend, and it's just very difficult to make the case for bearish. The most bearish thing you can say right now, or most bearish stance, I think, is neutral, and that's not bearish, of course, that's neutral. So Russell 2000 is, as I mentioned, what I think is the strongest looking market right now. You could call this a cup right here, and this being a handle. And we are long at Alpha Trends and looking to sell some on a breakout, take some off on a breakout there as people hopefully chase the market beyond that level. The reason that we got long was because it got above this level right here 2 days ago, and that's the where the buyers had regained control from this volume weighted average price and broken to a higher high above a flat to rising 5-day moving average. That's that orange line right there. So I think that the Russell 2000 is poised to be able to continue to break higher. If not, well, that's what stops are for. Currently, our stop is down underneath that 5-day moving average, just under 168, and we'll see what the market gives us. But the semiconductors had a pretty impressive recovery here recently. This week, it broke the downtrend line of the last month or so, and it is holding on to the volume-weighted average price from that peak back in June. So this 106 level is going to be an important little battleground next week, I think. If we can continue to hold above that 106-ish level, then it's likely that we will see a continuation up towards the high end of the range here that's defined by this horribly drawn trend line. So maybe up towards 110, in other words. The financials came right up to a little bit beyond where they were supposed to go, and by that I mean the measured move. If we take a look at the measured move in the financials from this low at about 26.30 to this peak right here of 27.30, we'll just call it $1. 26.70, add $1 to that. The measured move gave us an upward objective of $27.70. And then looking at the daily time frame, you can see that it came in just below the declining volume weighted average price year to date. It's interesting to see that this so-called death cross occurred pretty much right at those lows there, and we've seen a nice rally from that level. So that's why I don't pay a lot of attention to the so-called death cross. That is the 50-day moving average. That's the green line crossing down through the 200-day moving average. Moving average crossovers mean indecision on multiple time frames. What I'm looking at, though, as the banks have done a whole bunch of nothing for the last 4 months or so. But what's a possible scenario that could turn this market back around is if we took a trend line that kind of drew like this, and we could maybe draw it more accurately like that. But I think this kind of represents the essence of this most recent trend. So we could draw it as maybe more, an area, not a specific level, but this price band of resistance near that year-to-date VWAP. So if we were to see something like this occur, maybe where this ends up being a left shoulder, this could be a head, and perhaps we're turning right now a right shoulder in. This 20-day moving average comes up to meet it, and then these markets, if we could get back above and hold above probably 28 and a quarter, then I think that the case could be made that the financials would actually be in a position to start to lead this market higher once again. We are below a 200-day moving average or 40-week moving average, so that continues to keep us cautious. But we've had a nice consolidation here without any real breakdown, so it's definitely something to keep an eye on. Apple this week looked like it wanted to break, looks like it wants to break out. It's got higher lows coming into it and a defined level of resistance right here. Another large cap stock that looks ready to go is not Netflix, but let's talk about Netflix for a moment. I want to show you what we saw here was that the buyers immediately came in on Tuesday, but the average price since the earnings report anchored to that low. You can see the sellers regained control Thursday afternoon and maintain that control Friday. So I think that in the case of Netflix, it's likely that we're going to see a test of probably about 330. That's a prior level of resistance. It's also the volume weighted average price off of this gap here. What I also wanted to talk about was Nvidia. Nvidia is holding up well, and if we take a look at this one and just kind of clear everything off, we've got the volume weighted average price off of this low that the stock is holding above. It's holding above the volume weighted average price from this peak and from this low and from this peak as well. So that tells us buyers are gaining control. And I think next week, if you get it back above, I think it's 254.30, then it looks like the stock should be able to continue to move higher. Of course, we're in earnings season, and this company, in fact, I should probably just drag that down. Nice little thing about these TC2000 charts is you've got the earnings date on each one right up here. So be aware that earnings are still going to be flowing at a heavy pace next week, and try not to get in the way and blindsided by uncertainty around earnings. That'll do it for me. Have a good weekend.